Hello, everybody. It was a very good session overall for the stock market. Despite the NASDAQ only being up 0.23% today, the intraday action was further confirmation of the already pretty positive price action that we've seen ever since this market has retaken the 50-day moving average. The move off the February lows continues to leave a lot to the imagination, as there is only one day here with clearly above average volume, and it is a day that we churned. So right now there continues to be zero accumulation in the NASDAQ, same with the QQQ, but the price uptrend is pretty clear. So I'm not going to fight that. I'll take my long signals, but just remember, because we're not backing and filling properly before stair-stepping higher, and because we keep basically V-shaping higher, we're not getting the proper, large, nice and calm chart patterns that I normally want to see to go heavy into. We got some in 2013 and 2014, the great uptrends of the 90s, 96 through 99, and all the way 2003. Even there's a few stocks here and there in 2004, 2005, 2006, but ever since 2009, the uptrends are all start very oddly. With a few stocks here and there setting up the proper patterns. But I tell you what, if we're going to set up the proper patterns now it would be time for the market to consolidate the gains for a little bit, maybe even go up and test the 200-day moving average on the NASDAQ, back and fill for a minute. That would create handles on so many stocks. There are so many right-sided bases. Just look at the stocks on the watch list and the new positions page that are up today or longs it's basically stocks that I flagged that look good. And you can see tons of right sides of bases being formed. So a handle will go a long way here, a pullback, especially on lower volume. Remember, when we pulled back just a little bit here in March, we had below average volume, and we'll want to continue to see that as long as there's no real accumulation in the market. The Russell 2000 corrected its recent lagging whenever it was down 1.62% on the 15th by leading today up 1.56%. Beautiful, beautiful move in the Russell 2000. What was lacking, though? Volume. But still, higher than the day before, just like the NASDAQ, higher than the day before. That's solid accumulation, even though it's not great accumulation. NYSE, you can see the same thing with S&P 500, Dow Jones Industrial Average, another pocket pivot point signal. You can see the diamonds, pocket pivot point signal. But the SPY and DIA really kind of show you how kind of retarded looking, pardon my language, thus uptrend off the February lows has been. I mean, just look at the volume in the DIA. Compare that to the volume during the downtrend. And like I said, in 2003, you can go study the 2003 charts. We can go even look at them right now, actually, if you want to see what the great uptrend would ever look like. It's like this. 2003, notice that you downtrend here. After the lows, you rally. You have accumulation on the up days. No distribution on the down days, and even though you start to hit the new lows, there's no real distribution, and then you start the rally with very heavy accumulation, pull back, hold the 50-day moving average, and then retake it on heavier volume. Even more pronounced in the NASDAQ. You can see no distribution on that final leg down that led to the March rally, and not only that, we had beautiful looking green bop filled, heavy accumulation filled stock charts everywhere. So we're missing those, but it's okay. Subtrend so far, so well. Just isn't perfect. Let's see. So let's go over the actual signals. AOSL is the only sell signal. It's a full sell signal on the end of the day. If it would have hit my stop limits like that, or my sell stops like it should have intraday, whenever it gapped down to 1134, I would have been fine, as my first sell stop was back here below 1140. So at the open, if I would have gotten out 1134, that would have been great. And then if I would have been taken out below 1111, that would have been fine. But both of my sell stops were actually triggered at the same price level, around 1107. Stock actually closed slightly below it, but still terrible fill. So I had a larger dollar loss amount than I would like to have had. But everything else worked fine, including MXL. I put my limit orders at 1758 and 1765. So it would have been 1776. My limit order was placed at 1777, as this was major resistance back here. Oh, hold on. My apologies about that. But anyway, so back here, 1775 was the old high. 1775 was the old high here, and here it was 1776, so I put it 1 penny above 1776. It luckily pulled back to 1755 today, so I even got a good fill on MXL. So like I said, besides AOSL, everything went perfect today. Now getting to the new long positions, 2 high quality long signals, but unfortunately both of these names that I'm throwing up right now were only confirmed in the CanSlim scan. Now EBIX was qualifying just up till recently. I mean, I can't remember when it entered the scan. I can go back and look through my trading diary that I keep, and it would tell me when it was in there. But I know at least on March 2nd it was still qualifying, because I see I've written it down there. So on March 2nd, this thing was part of my Perfect Speculator scans back when it was at 41.33. So maybe it'll show up again once it's over 40. And that's probably what it is. It's in my pre-speculator scan that looks for stocks up 100% over $40 a share before they go into the main Perfect Speculator scan of $50 a share. So that's the only reason why EBIX isn't in there. But either way, it's a CanSlim quality long. Because of today's confirmation follow through, I'm willing to increase the percentage for being CanSlim long 2%. If it would have been in the Perfect Speculator scan, it would have been like another 2%, maybe 2.5 for this name for 5%. But instead, how I'm going to treat it is I'm going to go ahead, since the risk is so low, before I know that I'm actually wrong. So if it actually moves below 37.94, I know that I'm wrong, and that's a very, very, very limited risk compared to the potential reward that this Perfect Speculator quality name can produce. So EBIX is a 2.5% new long signal, was only in the CanSlim scan, not confirmed anywhere else. MNRK is also producing, by the way, also EBIX pocket pivot point signal. That's the ultimate go, even with volume just above average. Now, MNRK, it also produced a pocket pivot point signal, but it's a back-to-back pocket pivot point signal. And you see this kind of move right here. Big BOP surge, big volume surge above the 50-day moving average. This is normally a name that I would push it extremely, extremely heavy into, like very, very large long position, if this was like a 2003 follow through. But as it is, we're in 2016, and unfortunately, you see a big volume surge and a big BOP surge, and you're like, okay, well, that also was confirmed in your price volume BOP scan. So what is it? 2.5 plus 1, 3.5% long position? No, just 2.5%. I'll kind of do it as, 2% CanSlim, and if it would have made the price volume BOP scan under 50,000 average shares of volume, then 0.5%. But no matter what, EBIX is 2.5, so I'll keep MNRK 2.5. I may increase the size because of the limited risk. If to know, it only needs to go to 1529 before I'm totally wrong. So I believe that I might be able to go larger than 2.5% before I get to my dollar amount loss that I don't want to hit. But MNRK, if this thing wasn't such a thinly traded stock, it averages about 25,000 shares daily. So once again, limit orders only, but that's for everything I ever do. This would be a much larger position, but as it is, 2.5% long position, MNRK. And then also there's some speculative longs, NJ, pocket pivot point signal, bouncing off recent support here from its uptrend line on above average volume, small surge in green BOP after already having a whole bunch of max green BOP and tons of accumulation. Even though it hit new lows here, it did it on lower volume and then had huge accumulation off those lows. So pretty strong looking stock. So 1% new long position. That stock was in my 20 days green BOP scan. And then also CRAI. This one is interesting to me because it was an earnings winner back here in February. Since its earnings when it was accumulated, then pulled back on lower volume, and now as it starts to move up again, heavier volume. Well, this time we have back-to-back pocket pivot point signals and a volume and BOP surge. So CRAI made its way into my price volume BOP scan, so that's going to be 1%. And then also the new long position from yesterday, the speculative long position, PZE, volume BOP surge, pocket pivot point signal, was confirmed today with BOP staying max green, another volume surge, and another great intraday reversal. So back-to-back pocket pivot point signals, max green, another volume surge, price move, intraday reversal. This was in my price volume BOP scan, so we'll add 0.5%. Now, these would all be bigger. MNRK, EBIX would be 5, NJCRAI would be 2, and PZE would minimum be 1 if we had any kind of accumulation on above average volume. Since we don't, I continue to tread lightly. Hopefully we'll get a pullback and then get a re-breakout. Then we'll be able to load up.